call in a moment. We're waiting for some others to log in. This is the webinar for AIG and Insured Solutions. Seta on the call with us today, Senior Vice President of AIG, Specialty Workers' Comp Program. So we're very excited to have Tony on with us. And just a few little house cleaning scenarios. Number one, everyone is in listen-only mode. If you'd like to ask questions, please do so. If you will use the chat box that's on the right side of your menu to type in the question, and then we will address all questions at the end. If it seems like we're running out of time, we will get a list of those questions and then email back to you. So if you'll put your email address there, that would be helpful. Although I think that would be included in the list I get anyway. And in addition, if you don't have time to do the chat box or think of something later, there'll be an email address at the end of our presentation, webinars, plural, at insuredsolutions.net. That's webinars, plural, at insuredsolutions.net. And we will address your questions as well. So go ahead, next slide there, Tony. First of all, just a quick introduction of Insured Solutions. For those of you that have not worked with us in the past, we are a national managing general agency that specializes in alternative workers' comp programs and, of course, risk management for clients and agents, too. We only work through the retail agent insurance channel. We do not work directly with clients, so there will be no conflicts there, of course. And our whole goal is to make money for you, the retail agent, and make things as convenient and easy as possible in terms of finding and locating alternative markets for your clients. And we're looking forward to working with you if we're not already. And by the way, as far as that goes, any of you who have not gotten appointed with us yet, if you could please do so. It's on our website at insuredsolutions.net, and it's literally a 3 or 4 minute process, all done online. There's no paper that you have to complete, and you upload a copy of your E&O and your license and the W-9 form, and our marketing agreement for producers and agencies are already on the web. So we'd love to get you appointed so that we could set you up with a username and password as well for our online broker portal that you can enter in submissions. Also, we'll be this will be in the presentation, but if you have a submission now for AIG and our other markets, if you could email that to submissions@insuredsolutions.net. That's submissions, plural, at insuredsolutions.net. I'll be happy to get entered for you. You do not have to be appointed to email a submission just when you close one, but we'd love to get you set up and ready to go just in case you do get one sold with us. If you can go to the next slide, Tony. Just briefly on Insured Solutions products, we have 4 programs. One is called Source One. It's a combined payroll and workers' comp product using A-rated carriers nationally. Again, for mods, it would be typically very high, or if you're unable to place the program or client into a standard market. We also have a PEO exchange program in that we've contracted with the top 7 or 8 PEOs in the country that have all different niches, such as roofing, trucking, USL&H, temporary staffing. Again, very hard to place risk, and we can place that in a qualified program with a PEO. The next division is our PAYGO division, and AmTrust is part of that, as well as AIG. And it is where the client can continue to do their own payroll in-house, and they just complete a reporting form each pay period, similar to a monthly reporting form for workers' comp, but they do it every pay period, and it turns the policy into a pay-as-you-go, as-earned program, which clients love because typically the down payment is very low. In the case of AIG, it's only 10%, and typically the audits are not surprising because everything billed is earned. However, all the policies are. So that's our PAYGO division. And then we have a new Commercial Advantage division that offers general liability, umbrella, excess coverage on a pay-as-you-go basis in some and most states as well. So we're excited about that too. Next slide. And with the AIG program, I wanted you to know that your clients are going to be able to receive a certain level of risk management based on their premium size, and we'll go over that in more detail, at another time. However, the services are very intensive in that there's a nurse triage line, there's a light duty nurse coordinator, we have pre-screening forms, online video courses for clients and supervisors to take that are specific to a very creative risk management system, so that we can help to mitigate losses for your clients, help them get their mods down, and just improve their overall hiring as it relates to workers' comp. So that will be coming at no extra cost with our program, but again at varying levels, which we again will go through at another time. Next slide. So now I'm very pleased to introduce Tony Marcetta, Senior Vice President of AIG Specialty Workers' Comp Program. We're very excited to have been appointed with AIG as a wholesaler to help you place workers' comp through AIG. And by the way, if you're appointed with us, that means you have access to this AIG program as well as our other markets. So that does get you the access that you need in case that question was something that was on the top of mind. So now, without further delay, Tony, I'd like to turn everything over to you, and thanks for being here.
Thank you, Eric, and thank you for inviting me to this. I'm excited to have the opportunity to explain a little bit about what AIG Specialty Workers' Comp offers. So let me get started. So I just want to kind of go over what the high-level highlights of this program are. The main thing is that we will accept experienced mods up to 1.79. There's no, a lot of people ask what's the minimum experience mod. There's no minimum, there's no bottom on that, whatever. Obviously if they have a very good mod, it's a good account, so we'd want that. But also we will accept accounts that do not have a mod. And there are some parameters around that. I won't get into all of them now, but basically if it's a new in business account, it's a startup operation, we will accept that in this program. So that's one of the reasons why they might not have a mod. Some other reasons may be that their minimum premium before they came to us didn't qualify for a mod. So those types of things we'll review as we go through the program, but I'm not going to go over each and every detail right now on that. But I just wanted to let you know that no mod business is acceptable when they are a new in business risk. The minimum premiums is $7,500 for non-construction classes, and it's $10,000 for construction classes. There is a max premium in this program, and that is $250,000. And as Eric had mentioned before, we do have a pay-as-you-go billing option available. There's the 10% down is only taken in the first year, and it rolls over with the renewal. It doesn't roll over with the renewal, I'm sorry. There's no down payment after that as far as the renewal goes. And we'll get a little bit more into that program a little later on. At the bottom of the screen, you'll see there's some class codes listed. These are the class codes that are most successful to us in terms of quoting and binding, but we are open in a wide range of class codes, and it's probably even easier for me to explain it in the way that what we're not open in, and that is transportation. So anything that's trucking, buses, or anything with wheels, as some of us like to say, that is excluded from this program. And then there's some very, very high hazard classes. There's some obvious ones like chemical blending and roofing is one. Those are all excluded. But other than that, there is a really, really wide range of class codes that are open in this program. So some of the states down here on the bottom of the screen is just on the bottom of the slide. These are states that, again, are successful states for us in terms of where we do the most business, but we are open in all states except the ones listed under excluded. Excluded, you'll see Florida, Mass, Maine, New York, and New Jersey. So we are open in all those states, but the states listed on this slide are some of the states that we see the most success in. In addition to our regular program, we do have a medical temp staffing program, so I want to get into that, the highlights of that a little bit. The main difference with medical temp staffing is that the mod cap there is 1.49, and you have to have a mod. The no mod business is not accepted here. The same minimum premiums apply, and the same state exclusions apply. You can have pay-as-you-go billing in this program as well. And what this is, you'll see that the bottom is the list of types of operations that this program covers. So if you have a staffing account that exclusively provides medical temp staffing, and the samples, physicians, hospitals, home health care, retirement homes, and even nursing homes, if they're providing temp staffing to nursing homes, that is included in this program. Okay, the AIG WC Pay-As-You-Go program. How that works, as we explained, is a 10% deposit in the first year. There's no deposit on the renewals. This is a self-reporting program, so there is no payroll company involved. The insured actually signs up through one of, they'll get an email of how to sign up, and they sign into the system, they register, and then the insured themselves will report their payroll as they go through each pay period. It could be weekly, it could be daily. I'm not sure if daily is on there, but I know it's weekly, monthly, bi-weekly. Whatever their pay program is, that's how they set up their reporting, and then they just go in and report their payroll, and then they will be billed for the payroll that they reported on. And just to highlight that a little bit, it helps when you get to your final audit and you don't have an additional premium or a large return premium. And it also helps budgeting throughout the year. Obviously, this is very good for construction risks in the Northeast who may not work as much during the winter as they would during the summer months. So it actually helps the insured really budget how they pay for their workers' comp premium. And just a couple of submission requirements when you send in your submission to Insured Solutions. We do look for 3 years of loss history. Again, if it's a new in-business account, there wouldn't be any loss history, that's fine. A standard Accord app, and in certain industries there is a supplemental form that we have that just helps us as far as analyzing a risk, and the experience mod worksheet. So those are the main submission requirements. And at the bottom half of the slide, you'll see that the submissions will be sent to submissions@insuredsolutions.net. Okay, that's really a very, very high-level overview. If anybody has any questions, they can submit them in right here at webinars@insuredsolutions.net.
Great, and Tony, thanks for that. I do see some questions coming in actually in the chat box, and the first question would be, of course, near and dear to everyone's heart, what is the commission that are paid over the AIG program? And the commission starts at 6% of premium is the answer on that. And the next question, again, is, and maybe you addressed this, Tony, but are there any, will you do startup operations?
Yes, yeah. I kind of addressed it along with the mod question, but yes, we will do startup operations.
And then
except for the medical temp staffing program.
Okay, except for, so yeah, we will do startups except for medical temp staffing. And let's see. And then can we write class codes of like 8293 on, and do they, well, we could look that one up separately, but do we cover any seasonal employees and what that may not work during a pay period?
Yeah, seasonal employees, as well as their employees of the insured would be covered.
what about under the pay-as-you-go format? Would they have to, if there was no reporting for the period, would they just need to report maybe some clerical, Tony, to make sure to keep the policy in force?
The only thing you don't want to do is have an estimated reporting. So in other words, if you don't report anything at all, that actually looks negative. It looks like you're just not reporting payroll. But you can report the actual. So if the actual is 0 and you report an actual 0, that's absolutely okay. If it's, obviously you don't want to report 0 every month, but if for that month, if you didn't work at all, or that week you didn't work at all and you want to report 0, that's fine. But and the point that you're making is you're going to have a clerical person probably on staff the whole time. So yeah, I mean, you would probably see some payroll for the clerical person.
Yeah, okay, great. So they can report 0, and if it goes beyond a certain, let's say 3 or 4, maybe 4 weeks of payroll, then go ahead and start entering in a minimum clerical just to keep the policy in force to be safe.
It makes sense to do that.
And the other question that came in is, will you write multi-level senior living homes, 88, 29, 90, 70, multi-level, high-rise?
I'd have to look up the exact class codes. If it's a senior living and there's no restriction on the multi-level. No.
Okay.
As long as it's not a nursing home. We don't write actual nursing homes, but if it's a senior living center, there isn't a restriction on how they're set up.
Okay. And then the one question this would be for me is, how are certificates issued? That's a great question. We prefer you as the retail agent issue all certificates. If you do need assistance, we can also help from Insured Solutions, but we prefer that you as the agent, once the policy is bound and we get you the policy number and information, that you go ahead and issue certificates in your certificate system as you would for maybe a direct product as well. And then the other question was on commission, the commission level, 6%. So we talked about that. It starts at that. We do have some other programs that can get a higher commission level for you that we can go into with your marketing representative directly as well. And see what else we've got coming in here. Can you look at states that are excluded if they have incidental payroll in those states? In other words, like Florida and such, would be a question, Tony.
That is an excellent question, and I should remember to include that. Yes, absolutely. There's really no percentage. There's as long as they're not the governing state, meaning as long as they're not the home office state or the state with the most payroll, you can have incidental exposures in those excluded states. That's a great
Excellent. Question. Excellent. And I think you alluded to this, Tony, but are there any forms of transportation that you would write? Not long haul, but maybe, non-emergency, any of those?
Right now, the only class, I'm trying to think through all the class codes in my head, like a Rolodex here. Yes, non-emergency transport is actually still the only type of transportation that we will write.
Excellent. And then as just a clarification, a question came in that wanted to be clarified, that this is not a PEO policy. I know we do offer that model for some clients that are fit for that or want that, but this program with the AIG Specialty Workers Comp is a client named insured traditional workers comp program, a standalone product. The policy, the agent and the client will get a copy of the client's policy itself, and all of the information that will be reported to the bureaus for mods such as NCCI and WCRIB. And there's no additional administrative fees charges like there would be in a PEO as an example. However, there is a policy fee that is based on premium and varies, but it's very small compared to the PEO activation and fees for those that have worked with us. Those are more intense to enroll this product because it is traditional. There is a small policy fee that will vary from as low as $500 and so on. But that is charged It's not, it's just based on premium there. But this is definitely not a PEO product. That's a great question on that. Let's see, I got some more coming through here. And one thing, the classes we listed are not a full list of classes, and that was just some targeted classes of the top classes that AIG is writing right now. What we'll do is have a full listing on our website that will be implemented soon. However, I would say as long as you don't veer into the height, depth, long-haul trucking, temporary staffing other than medical, that it would be something you should send in. The maximum, as you noticed, though, is $250,000 on the premium on that. But I would send in accounts that you want to try. I did notice, as we've been quoting a lot of accounts, the credit of the client in terms of the financial credit history is heavily weighed. So even though it might fit the underwriting criteria, if the client's credit is poor, it will be declined. Antonio, are there any other areas you can think of that would cause a declination other than, of course, the traditional underwriting sense?
I'm trying. No, I mean, obviously it would be the mod, the min-max premium. You're right about the D&B score. Those are really the high level declinations. If they're temp staffing other than medical, if they are in a PEO, all of those things will cause a decline.
And not to sound discouraging whatsoever, but this is a program where when we enter 10 quotes into the system, even that might hit the right class code and state, I would say maybe we get quotes for 3 or 4, and a lot of that would have to do for various reasons, for underwriting, maybe losses, but also credit. So keep that in mind. Don't get discouraged. Just keep sending submissions in. If it's a fit, we're going to pop that quote out for AIG first. If it's not a fit, we will hopefully have other alternatives to give you and try to meet your target, on that, as well. And also, I wonder, one question is, as far as agent of record, broker of record processes, how does that work? So the good news is that we do honor BORs and AORs. What we'd like to do, too, that if you could get that to us, then we can get the quote released back to you. In many cases, the system will even let us know what the pricing is looking like, so you know whether it's worth your time to get a BOR. So we have a template that we will send you every time we notice we're blocked, in case you were not the agent that blocked it, maybe using another MGA. Also, you can, kind of a little bit confusing here, but if you prefer to work with Insured Solutions as your MGA and maybe someone in your marketing department sent it into another one of our competitor MGAs, you are allowed to use this template that names you and Insured Solution as the agency of record, so that you could work through us to get that quote. And we've had that happen a couple of times recently on that. And then also, one of the questions that came in, Tony, was, do you write plumbing and excavation type risks?
Yes, both plumbing and excavation are included in this program. Yes, we do.
Excellent. And then let's see, will you consider a risk with a brief lapse in coverage?
No. One of the things we do try to stay away from is risks with a lapse. It's usually we've tried to, just to kind of explain that a little bit, but not go too crazy. We've tried to look at them, but to be honest, we've never found a real good reason to. There's always 1 or 2 stories out there, but in general, we've never found a real good reason to write risks that have lapses. So we do stay away from them. Okay.
And also, one question came in: if the client was with a PEO and in the past, and they have valid loss information from the PEO, such as your larger national companies, will you be quoting it?
They would need to have their own experience mod in that instance, not just the losses.
Okay, so hopefully the PEO, like in the state of California, as an example, they're following Rule 4. They're providing loss data through WCRIB, and in other states, NCCI. Therefore, the client is promulgating their own XMOD, and therefore they would be eligible for a quote with AIG, even though they were with a PEO.
Correct. Yes.
Great. So that if
they want to come out of the PEO, yes.
If they want to come out, great. So they can come out of that PEO. And if the PEO, or if it was one of these type of labor contractor type sole employer arrangements, was not doing the mod reporting, then they would not be eligible for a quote, would be the antithesis.
That is correct, yes.
And they ask again specifically regarding the client's credit. Is it just based on a D&B score? Like what are they evaluating in the system for the credit of the customer?
Yeah, there is a check for the D&B score itself, that score that's either 0 through 5. But there are also other D&B checks that we do, and this all happens in the background, but there are other D&B checks as far as the credit worthiness, the I forget what the D&B refers to it as, the percentage of a chance of staying in business in that industry, and all, time in the industry, all kinds of things like that. So it looks at a lot of D&B factors, not just the credit score.
Got it.
Credit score weighs the heaviest, but there are other factors.
Okay. And then also in regards to the minimum premiums, you may notice that in the marketing that we send from Insured Solutions, our other programs unfortunately have a $10,000 minimum premium outside of California. Inside of California, it's $25,000. However, AIG's minimums are lower, so $7,500 for non-construction nationwide, and $10,000 for construction, and then and again, maximum premium is $250. So we will honor that if you have less than the min premium that we send out in our marketing. We will allow AIG to still quote it, so feel free to send it in. And if for some chance you see a declination coming out due to minimum premium size, just please respond back. We're trying to get used to accommodating that for the new program. And another question was, in regards to being blocked and so on, and appointments. So Tony, I think you spoke over this with me. In regards to being blocked, if they submit the client account either through the agent, through their own appointment, through another program with AIG, or I know you have various different programs out there. So basically, can you go ahead and is that blocked no matter what division of AIG they did?
I'm not sure I fully understand the question, but
yeah, that was terrible. Sorry.
No,
I mean, like what blocks the submission other than, of course, submitting it? If they've got their own appointment with AIG, or the various other programs with AIG, that will block the submission. Correct?
Correct. And it in order for us to in order for us to unblock it, it would have to be with somebody like yourself that has the access to the program, if that makes sense.
Yes, and so basically if you have your own appointment and you'd like to continue to use us, please submit to us first if possible, to just continue to not have to deal with being blocked. Or if you happen to, your marketing managers, go ahead and submit in to your own appointment or to another resource for AIG in another department / area, because AIG has many different programs. This is the AIG Specialty Workers' Comp program. Then you can undo the block with a BOR letter, very simple and quick. We could usually get it within the same day, or not the next morning as well. And let's see what else. On the industry-specific supplemental applications, if you would just send in your submission as normal. If you have a general supplemental form that you use at your agency, if you could utilize that and fill in the portion of the supplemental that addresses that industry and go ahead and get that in, that usually will answer most of the questions. And then our underwriters will then review it and send back more questions and or another supplemental form if it feels like it's very lacking. Obviously the medical temp staffing, we will get that on our website. For that supplemental. Any other supplementals you can think of, Tony, other than the general?
No, you know, and that, yeah, the ones that we use the same forms. I think, I'm not even sure if it's a court that publishes them, but they're pretty general. If the agencies have their own forms, that's absolutely fine.
Okay. And the other question, how do we find out if our agency is already appointed with Insured Solutions? And the way you can do that is just email webinars@insuredsolutions.net and or on our website. When you first go in to get appointed, it asks to put your federal agency's federal ID number in, and if it shows blocked, then that means you're already set. Although again, maybe emailing webinars@insuredsolutions and or your marketing representative, that would be fine. We'll check it for you just to make sure. Let's see, on the $250,000 in premium, Tony, maximum, does that include the mod or is that just manual before the mod?
That is based on the unmodified manual premium. Good question.
Excellent. And then a couple more here and then we'll wrap up. I know it gets kind of long here on the webinar. And again, be happy to answer your questions via the webinars@insuredsolutions.net or having contact with your marketing rep. But do you write plant nurseries, landscape plant nurseries?
I wish I was 100% sure, but I'm fairly certain we do, yes. I know that those class codes relative to that, I don't know the exact class codes, but they all should be eligible, yes.
Excellent. And let's see, last question here. You made mention to Tony about, you know, of course, wanting lower mod accounts. They're asking as a comparison on the lower mod submissions, are you more like, as an example, Zenith, where rates are going to be really more competitive for more of the higher mods, or do you feel that you can compete on the lower mod business with the other standard markets out there like your Travelers, Hartford? Again, not to throw other carrier names in your face, but I know that's was in the email question.
No, that's a very good question. It's a valid question. I wouldn't say that we would compete just based on the lower mod itself. It's really based on a lot of other factors, and a big one is the rate adequacy within a state. So some of the states, you know, Texas comes to mind, it has an extremely good rate adequacy. You know, that combined with having a low mod account, yeah, you should get a very competitive quote in something like that. And I just use Texas because that's an extreme example of a rate adequate state, but there's a lot of rate adequate states out there.
Great.
So it's not just the mod alone. There's definitely got to be some other components to it.
Sure, and what we have noticed, and I think you warned us of this as well, is that, and speaking specifically about California, there is a surcharge in the LA County market, so you're going to see some pretty high pricing there. Also, Orange County will be a little bit of surcharge, and then as you go to San Diego and NorCal, you're going to see no surcharge there or limited surcharge, but LA County is getting surcharged, and there may be some other areas. Tony, I don't know if you know off the top of your head in other states around the country that are known for surcharges, but that's what I noticed in the underwriting data.
Yeah, no, it's only California. It's definitely in and around the LA region as far as surcharges.
Right, so keep sending them. Right, keep sending them in. So I would say, just from an agent to agent kind of conversation here, your LA market is going to get that surcharge, so most likely the higher mods are going to be where you'll see some competitiveness there. Otherwise, you should get back to normal as you go to San Diego, NorCal, in terms of at least the pricing, adequacy there. Well, we'll go ahead and wrap up here again. We appreciate all of your time, Tony, and joining us here. Again, excited about working with you and AIG for this program. And, of course, our agents that are on the call, thank you so much for your time. Again, contact your marketing reps and webinars at insuredsolutions.net. And if you have a submission, you can do that even without being appointed right now at submissions@insuredsolutions.net. We would love to help you with any of your accounts that you have coming up now in July. I know it's a big time for all of us, so hence the reason for trying to get this meeting scheduled, prior to July 1. But thanks again to everyone, and Tony, thank you, and
Thank you.
we'll talk to all of you soon.